think we've got a pretty good idea of what you're looking for. Now, what ultimately constitutes an entry for you? And then after that, I want to talk a little bit more about some of the other concepts behind it as far as merging charts and DOMs.
Yeah, sure. So entry conditions for me are, first, have a view on how the market traded. You kind of want to wait for the volume to fill out first. So you can see can you see my mouse, by the way?
Yeah, we've got the pointer there.
Okay. So let's say you take this and you look at the curve that's being formed in the ES.
Right.
The curve is thick around where I'm hovering, and it thins around 81, and it thins around 89.
Sure.
On a day like today, which is arguably a balanced day on ES, I mean, NQ looks slightly different today, looks a bit more trendy. On a balanced day, you're looking for trading reverse back into the distribution. So if market was to come back up to 89, I'd be looking for shorts back into this area here, because we're trading within the distribution. On a trend day, what will happen is you'll get a bunch of these distributions form. One here, one maybe 5 points higher, another one 5 points higher. In that situation, I'll be looking to trade, again, back into distributions, but with a different mindset, that I'm not trying to buy the low or sell the high. That's not the aim there. I'm just trying to find areas where there was a lot of volume transacted and trade with the assumption that if a lot of volume is transacted, people don't want the price to move. See, what this implies, this thickness implies that there is a lot of people who want price to be here.
Sure.
Right? And when price moves away, they have an incentive to sell or buy so that price comes back to where they were.
So this brings up an interesting question, because, for candlestick traders like myself, we get so nervous if we potentially get ourselves into a choppy day. But it sounds like what you're talking about, this balanced area, while it may be a horrifying chop for somebody like myself, you're seeing an opportunity in this to where it's not necessarily looking for another area. You can take great opportunities within that same area that might be more beneficial in conditions that would tear most of us up.
Yeah, absolutely. So I think that's really the decision you need to make as a trader, whether or not you are interested in playing. Okay, before I continue the answer, I think it's important to note the market has two phases. It either ranges or it discovers.
Sure.
Right? In range-bound markets, you've got these kind of two levels. It's just bouncing between them, and people call that chop. When it's in price discovery mode, you'll get trend moves where you just, and in these days, I mean, arguably the overnight session today was a trend move, right?
Sure.
200 points just straight up.
Right.
That's when the market doesn't really want to bounce between two levels. It just keeps breaking the top one in today's case, or breaking the bottom one. So what you need to decide as a trader is whether or not you want to make money when it's chopping, or you want to make money when it's trending. And if you're good enough, you can make money when it's both.
Sure.
But the idea is to have some idea of what the market is doing today already, and then decide the strategy based on that.
So you're going to change the way that you trade based on conditions coming into it, based on what this volume profile looks like by the time you typically trade US morning session?
Yeah, typically the first hour is kind of where I'm. Yeah.
So you want to see what this profile looks like. This will give you a gauge of what you're looking for the day, and then that gives you your execution parameters, if you will.
Yes, correct.
Okay. Now let me ask a different question, because I think for so many of us, again, charts are just far more common than this. But let's take somebody who's been trading for a little bit. They're comfortable with trading, and they use their charts. How would somebody like that utilize something like this, utilize a DOM and come into where they can see different opportunities, maybe in addition to what they're seeing in the charts, versus making a transition?
Yeah, I think, well, one of the best things to do, and it's just the advice that they give you on all DOM training courses, is don't do both.
Don't do both? Okay.
Don't do both. Now, do I agree with that? Yes. Personally, I do. would it be worth spending a little while just watching the DOM and saying to yourself, well, okay, let me go on sim, right? Do it with an eval so that you're not putting money at risk. But I'm just going to try and trade what I see. And
Sure.
you'll realize that you have certain patterns as a trader where you keep spotting something, trading based off what you're spotting. And it's quite important you trade based on the same thing that you spot, right? Don't
Sure.
randomly place whatever trade for no reason.
Right.
Figure out what you're doing repeatedly. Then figure out why you're doing that thing, right? And then figure out if that thing makes money.
Right.
And over the course of a few days, you'll realize, okay, this isn't working, right? Then you could say to yourself, well, if that's not working, what might work? And if you find something that is working, okay, well, can I replicate it over the course of a continued amount of time, right? It could be another week, another month, whatever. The alternative, of course, is to have a chart up next to you and just watch how a chart looks on the DOM. But I think it's really important to develop one skill at a time. You know,
Sure.
you don't. I think about trading on the DOM and trading on a chart as two different sports. And someone who's great at cycling doesn't automatically become great at running, right? They are cardiovascular training. So yes, to some degree, you have some transferable skills,
Right.
but they're not the same. And I think that's how I would look at it.